In today's Target in Focus, we'll be taking a look at Euro dollar, dollar Aussie and pound dollar. Joining me to discuss these currency pairs is Craig Ferguson, Director of Strategy at Antipodean Capital Management. Hello, Craig. There have been many talks between EU leaders lately, but still no concrete resolution for the euro crisis. Bearing this in mind, what are your short, mid and long-term predictions for the euro dollar?
Our short-term forecasts are for a rise in the euro over the course of the next couple of weeks up towards the 127.50 level. Medium term, over the course of the next 3 to 6 months, our forecast is still for down. And that would be a profile between 118 down towards 110 over the next 12 months. If we look at the comments coming out of policymakers in the next 2 weeks, it looks like we're hopefully going to get some definition of what Mario Draghi defines as unlimited measures to support the Eurozone. There does seem to be a strengthening, inclination amongst policymakers in the EU that they need to protect against a breakup of the Eurozone. And as a result of that, they're actually justifying bond purchases in the context of that, their so-called connectivity risk, whereby a nation potentially moves out of the euro, or at least the market tends to think that the nation may move out of the euro, while at the same time the financial markets start to price that in, and therefore bond yields rise. So quite clearly, it looks like policymakers are saying that that's an abnormal event, and they're justifying intervention as a result of that. So it does look like in the next week or two we'll probably see some definition of what that is, but at the moment really we just see press reports speculating what it may be.
And what long-term damage do you think the euro crisis and flagging global GDP will have on the major currencies, and which currency do you think is most at risk?
Our view since the first quarter of this year has been that we'd see a softening in data all the way into the early portion of the fourth quarter, so around October. That clearly is being led by the Eurozone, where we don't think that the UK, for example, or even EU continental nations have passed their weakest point. So we'd still expect recessions going forward, an IFO getting down from around 105 where it is now to around 90 or 95 eventually. And under that scenario, we'd expect lower inflation at ECB level, and also lower interest rates. So quite clearly, from our point of view, we tend to see markets softening up in Europe even further. The impact on major currencies will be quite varied. Obviously, it's one of the reasons why we think the euro will continue to decline as yield differentials move against it. We are starting to see follow through on that into US economic weakness, with the ISM dipping below 50. Our view is that even just for a normal slowing period in the US, even if it's mid-cycle rather than just simply a double-dip recession, we'd probably see the ISM between 45 and 47 rather than 49.5, which is where it is now. So we think the US can still weaken. We think Chinese growth probably hasn't passed its low point yet, so we'll probably see further weakness in Q3 down to somewhere between 6.8 and 7.2%, which is lower than market estimates. And one of the issues flowing from that is what happens to commodity currencies. So normally when you get those three blocks starting to weaken, you get a much weaker Aussie dollar, New Zealand dollar and rand and Canadian dollar. So we do continue to profile those currencies out over 6 to 12 months in terms of forecast declining from current levels.
Craig, can you tell me what are your short, mid and long-term predictions for the US dollar and Aussie dollar?
So for the dollar index, we expect the index to rise up towards the 89 level from its current levels just under 82. That we think will be driven by, to some degree, economic outperformance of the US, but more by risk aversion. In terms of the Aussie versus the US dollar, in the very, very short term, it remains possible that we might see the Aussie up to between 107 and 108.50, but outside of September to December, we tend to think that we'll see the Aussie continue to stay range-bound, so we'd expect it back towards parity early into next year.
And what are your short, mid and long-term projections for the pound-dollar?
In the very short term, probably up towards to between 160 and 162, but the underlying dynamic of the UK economy is one of recession, so we continue to expect further quantitative easing from the Bank of England. That will probably continue to cap the strength in the pound up around that 162, 163 level. And over 12 months, we expect it down to between 153 and 145.
Thanks for joining me, Craig. Well, that's all we've got time for right now, but stay tuned to Dukascopy TV for more updates and interviews. For now, though, goodbye.